GKFX Prime presents the Market Analysis Webinar.
Weekly market analysis video for you this week. As ever, my name is Dima and thank you for joining me. Gonna have a look at some higher probability trade opportunities this week. As always, you know the drill if you've been with me for a while. Gonna see what we've got for this week. So gonna start with the news items and the calendar. Let's have a look at what we've got for this week. So on Monday, we have CPI numbers from Switzerland on the Swiss franc there. Tuesday, we've got a claimant count announcement from the UK on the pound. And we also have the CPI numbers on the dollar there, as CPI has been a big mover in the market, or I should say a catalyst for movement in the market lately, so watch out for that. So I have put up a little star there. Wednesday, we have a speech from the Bank of Australia. We have CPI numbers on the pound as well, and then we've got two euro-based news, economic forecasts, and a speech from the central bank. And also on the same day on the dollar retail sales numbers. On Thursday, we've got the unemployment rate from Australia, so watch out for that. I'll put a star on there. And also on the same day, a speech from the Bank of Australia, the central bank there. And then on the lower importance, PPI numbers on the dollar. And on Friday, nothing much to talk about there, just the small retail sales figures from the UK on the pound. So that's the week for this week. We are going to really pay attention here if you're going to watch out for the big movers. We've got the Aussie there. We've got a few bits of news on that, and the euro as well. And then there's the dollar for CPI numbers. So that's the week. Looking ahead, and let's have a look at what we've got on the charts. Some of them are carrying over from last week, and we're going to look at how it has developed, what we've got in the price action and the candles, and then we'll put some things together and look at a few scenarios, right? See where we're at and what the market tells us. Okay, let's start with, as ever, the majors. And this week, I'm going to change it up a bit. Let's have a look at the Aussie dollar. And we do have some news, as we mentioned, remembering always the news and the possible volatility, more likely volatility to happen in the market. So we've got to bear that in mind when trading those particular currencies and the pairs with those currencies in them. So we've got both the Australian based news and the dollar based news this week, and this is the Aussie dollar. So we got to bear in mind the volatility that may come or may not. You never know what the market gives. So last week we ended up, previous 2 weeks, in the bearish scenarios. The weeks ended bearish, and therefore looking to continue on that bearishness. However, we are in a long-term uptrend, which means this trade will be against the trend if we are going to short it. What is that going to look like? Well, we could see we have built up this level here. And you can see there's a gap here in the price where the market has not come back to. So I'll be looking for the market to come back to that, especially on the close of a bearish week last week. And what that will look like, well, I'll be looking for a break of this level here to continue the bearishness. The invalidation point would be up here. And if we see that break, the previous high, which would be in the last obvious high, which would be this higher up here. This would be the invalidation when we break, if we break, and then continuation to the downside into this level here, which is the 0.682. Let's call it that. Let's put a marker there. Okay, so that's the target area I'll be looking for. Short-term trade, this one, because of the possibility of a reversal. And let's see what happens when we get to this area. So overall, looking at this sell move, this short move to the downside into this area on the Aussie dollar here, and breaking through this zone area over here. So that is the Aussie dollar, and then continued strength on the dollar, conversely, based on last week's strength in the dollar. So that's Aussie dollar. Let's move on to the next one. Let's look at CAD yen. CAD yen, you can see that we have had this retracement and we're now moving into the upside. Weakness in the yen, and we see this consecutive weeks closing bullish. Last week this candle closed bullish, a bit of a funny one. We had a very large gap. Let's move on to the daily. You can see that very big gap. And last week, as projected, we had this area that I marked out and the bounce off this area to go higher, and that is indeed what happened. It consolidated a bit, and then we had this big wick, about 80 pip wick to the downside, showing a rejection, and then moving higher, which we're now doing. So as that is what was expected, and this is the next level that I'm looking at. You can see on the weekly we have this possible kind of swing with these higher closing weeks. And going back to the 4 hour, I'm going to continue with this idea. So here's that idea. We have delved into that retracement and we have closed higher. So now a nice better price, with this low being the invalidation point, and this would be the next level first target, and then this would be the second one at 1012, and this one at 1992. Okay, and we've now broken through this trend line as well, if you want to look at that, although it's not really necessary anymore. Definitely pushing higher on CAD yen there. That's the bias for the week, looking at that higher probability scenario. If we go below, break below, then the whole thing is invalidated and no longer going to be interested in that setup, because that will break down. That's CAD yen for you. Next, let's look at euro pound on the weekly. Now we are in this current uptrend, closing higher, and since last week as well, I was looking at this area and for the market to move higher. As you can see, we had no reversal action there, nothing happened. We just kept moving lower and lower. However, we did not break the previous low, which is down here, so this could still retrace and could still move higher to our target. It's not yet clear. And where would that be? Well, I'm looking at this gap in price right here. So where we are right now is the area that I'm paying attention to. Right now, no clear reversal. What the reversal would look like is if we get a break of previous structure high, and then a pullback, getting a better price, and then moving, continuing to the upside. And this would be a decent risk to reward idea right here, with this being the first level and this being the second level target to watch out for. So that's the high probability that I see at the moment with these breaks higher. However, if we break below this level down here, then that would be invalidated, the whole idea. However, we still have a lot of bearishness. We're still in this continuation, this kind of downtrend that you can see. So until this trend is broken and we have a very convincing breakthrough and then moving, continuing to the upside, continuing with the trend, with the overall bias to the upside, that is when I would be interested in taking. So got to exercise a bit of patience here and wait for the market to come to us, and then the probabilities will start stacking up. Until then, that is not the case. So a bit of patience on that one. Let's see how it ends up. And that, again, euro news this week, pound news this week as well. So euro pound, let's watch out for that. Next one I'm going to look at is pound CAD. Once again, another pound pair, pound news, remembering that. I did have a look at this zone last week and played out as expected. So now that I have reached this area, what I'm going to do is I'm going to take that off, look on the weekly again, and I can see I marked out the fib. We haven't reached the halfway mark, so we're still in this retracement phase. We broke through this major point, major structure, and now I continue to the downside. Previous week was very, very clearly bearish. This pin bar with a massive wick previous week was also bearish. So yeah, just looking for that continuation and carry on with that trend. So here was that first target, so I can just remove that, and now we've got this one here as the next one. The 50 would be, let me just mark this 50% area at 1.6 with the next obvious one that's not that far away, and then the next one will be this one here at where the 61.8 is lying, as you can see, at 1.58. Continuing on the bearishness means, well, we're gonna look for another swing. So another swing, we now don't need, let's just move this, Our next reference points is the last obvious swing, which would be up here. So not looking for the market to invalidate that. That is a very long way away, 200 pips. So the next point is a retracement. So what I'd like to see, or what I would wait to see in terms of higher probability, is a retracement to the upside in the week, during the week, and then continuing to the downside and weakening off. And you can see that it's 300, 400 pips away. So that should be a decent one if that works out. If we just collapse lower and don't see any retracement in the market, then so be it. Well, it is what it is. And that will just be a missed trade. And if the market does not provide an entry, then so be it. Always be being flexible and remembering to manage your risk. So no point entering if it's a riskier trade. That's the idea here. We are breaking, as I said, these lows, looking for further breaks to the downside and weakening off in the pound CAD. At least in this little move between where we are here and this next point. And after that, we're going to have to reassess. All right. So that's pound CAD. Bias is to the downside. Next, let's look at oil. So as you can see, we've been monitoring these markets for a while because we are basically picking out what looks to be a higher probability and sticking with it until the entries and the market comes to us. Sometimes it does, sometimes you have to wait the next week, but eventually we will get there if we stick with it. Okay, here's what we had last week on oil, and based on what I was looking at this area of where I was interested in to trade from. However, we went right through it and we took out this low right here, and then we created a reversal. So there was no idea for entry here, even though this was the place to look at. We did have this pin bar here on the 4-hour. So if you happen to take that, that would have been a loss because the market went lower. But such is life. We had a lower point here, so the market went for that and then reversed. So it wasn't, in fact, not this area. It ended up being the lower end, which was down here. This happens, and that is absolutely fine because, well, if you manage your risk, you should be fine. And then we may get another chance here to enter. So what was the overall idea? The overall idea was to the upside. We headed lower, coming back into this range, but the bias is still to the upside. So let's stick with that and see if we can find something interesting to trade. Just delete that. Let's delete these. We're not up here yet. Delete that. So what I was looking at last time is a break of these highs. We didn't quite break it. We created wicks through that, as you can see there. So still looking to break that, and we're now going to the upside. So the reason I'm saying that is because we went down to this area, rejected that, and then we created a new high, broke a structure, and now we are bullish once again, even though we are still inside this range area from here to here. So the safer bet would be the break of these highs and then a pullback and then move to the upside. However, if you want to get an earlier move, well, the earlier move would be a pullback to a better price and then a move higher. And what I'll be looking at is this swing as the invalidation area. So if we go lower here, we could still be going up and down in this range. However, if we move to a better price and then push higher, and then a break of this high would be positive confirmation of going higher. And if you want to go for the safer, even higher probability trade, you'd have to wait until we break well through these highs and really push to the upside. So one option is this idea without the break here, and then another option would be the higher price here, but obviously it will be the higher price and you'll get perhaps a smaller risk to reward and a smaller, not such a cheap price to get in on. But the probability, as I see at the moment, is stacking up towards the upside, and the argument, I would say, is biased to the upside. However, because we are still in this range, I would want to see a break of these highs first of all. So manage your risk. You may want to reduce your risk if you're taking the lower probability trade. We have, just to make it more obvious, first of all, this area that I'll be looking for a possible reaction from, and then this area down here would be an even better one. So several options here. The price action you may need to wait for that. Maybe perhaps Wednesday, Thursday. Let's see how it works out, because we've got dollar news CPI. That is Tuesday. So that's oil there. Let's move on to the next one. And the next one will be NAS 100. Start on the weekly as always. And on the weekly, I was looking for the market to reach this area. And this would be a good area to sell from. However, what happened? Well, we moved lower and we just ranged and then moved lower instead of higher. What I was actually waiting for is this area to be the place where the market would find a bit of so-called support, or where it would bounce from. And what happened is when we actually reached into it, we didn't create any reversal and there was no push to the upside, and we went lower. Now, the thing with this, let me just remove these, get them out of the way for a minute. Just clean up, easier with a cleaner chart. So let me just do that. You can see we moved lower. However, this was the invalidation point. Here was our fib, you can see, and we're now reaching into the deeper retracement of the 78 here. We haven't broken this low. So since we haven't broken this low, and until that happens, I will still be bullish into the original zone that I'm looking for. And this was the idea here. It didn't quite happen, but let's have a look maybe this week. So as I was saying, sometimes it takes a bit of patience. You need to wait a little bit before taking it, the trade, waiting for the setup to come to you. And this is the case. We had the range and then it moved lower. You would have to wait. And then what happened? Well, didn't produce any price action. Nothing happened. We just were weak, continuing on the weakness. Now, the next question would be, are we going to find some reaction, some support from this level right here at the about 12,200. If that is the case, and we do have that, and we break these structural highs and we move higher, then I'll be looking to enter. The higher probability would be the buy scenario to go up here into the 13,000 level. If we don't, we have a breakdown below this low, Let me just remove the fib just so the chart is a bit cleaner. Below this low, then this whole thing would be scrapped and I wouldn't be liking this idea anymore. Now we're going to have to see if we do get that reversal or we break lower, and then let the market come to us, let it show its hand. If you don't catch the entry around here, the other possibility is for a break move to the upside, I should say, pull back again, getting a better price, getting a cheaper price, and then continuing to the upside. So those are the two options I'm looking at. If it breaks lower, I'll be leaving this alone and waiting for the next week's idea to get in on that. So that's the NASDAQ 100. And finally, as always, going to end up with crypto and Ethereum as we looked at last week. And here's that last week. Ranging movement, ranging market. You can see that here. And the week closed bearish. After this range, it did not continue higher. What was I looking at last week? Well, I was looking for the market to break the high and then create a better price and then move higher. We didn't move higher. We actually ranged and moved lower, and when we broke now of this low. So what does that mean? Well, that means that this original area that I was looking at as somewhere to buy from, you can see here we marked out last week. This was in last week's video. We went lower and now it looks like we may be reaching for that area. So two things to bear in mind. One is, I don't know if we pull into this area or we go that deep in the retracement. The market can always reverse off where it is right now. And secondly, this is a short-term trade because we are in the retracement phase and the overall move, the overall bias is to the upside. As you can see, we broke through here. We're having momentum to the upside, broke this structure higher, broke this trend line. We are now moving higher. So now the question becomes, where is the best possible entry? Well, best entry would be, we've got this gap in price. I have my invalidation point up here, so I'm not expecting the market to break through that just yet. If I'm going to take the sell idea, let me just move this. Here's that zone. So I'll be looking for a retracement and then continuation to the downside into this area. And when we get to this area, then I will reassess and perhaps continue on the upside momentum. However, that is some way away for now. At the moment, what I'm looking for is to continue on the bearishness of last week, which is about here, 15.87 or thereabouts. And this will be the small move that I will look for this week. Now, if we don't reach for there and we go lower, we head lower, so be it. I'll just leave this alone because now we will be getting a worse and worse price. And there's not much between, where we are round about here and the expected target or the expected reversal point. Yeah, so you want to be very careful trading retracements or pullbacks, whatever, however you want to call them, because they are lower probability and the trend, as they say, trend is your friend, jump on the trend, whatever you want to say about it, whichever terms you want to use. And here we are. The other clue here that I've got is this gap, this big gap. So market tends to close the gaps, and we've got a gap here, and we also actually have a gap lower down. So this is a zone, first of all, first one, and the other gap is here. So we may reach even lower. It's another possibility. But we'll wait until that happens when we get there. So that's Ethereum here for you. Just making a change from Bitcoin, and it does look a little bit better, I would say. So let's stick with Ethereum for now. And those are the higher probability scenarios that I've marked out for this week. So thank you very much for being here. And once again, thanks for joining me for this week. Hope you manage your risk, pick your setups carefully, manage your positions, and remember, as I'm always saying, pick your setups, pick the ones that you're going to trade. Don't pick all of them at once. Don't get lost in the markets. Focus on the ones that are the higher probabilities for you. At the moment, I'm just giving you some options, and if you want to go ahead and choose carefully and pick your trades based on what you see in the market. Don't know how the market will plays out. Let it play out and let the market come to you. Let the higher probability scenarios play out rather than gambling or taking unnecessary risk. Patience is the key. All right, so thank you very much. See you next week with obviously more trade setups. Hope this has helped you, and bye for now. All right, good luck in your trading week. See you soon, guys.